Hey guys, so our session is being recorded. Let's just make sure everything is 100%. Yeah, also guys, just let me know if you guys can even see what's on here, because I was just taking a chance. I wasn't sure if you guys are actually going to be able to see what's on, but just let me know if you guys can see. And if you can't see, I'm gonna swap my camera around and use my front camera. Yes, I can see. All the letters clear. All the letters are clear. Hopefully they are. Let me also just give my camera a young wipe also. Let's just give my camera a young wipe just to make sure. Okay, awesome guys. Tepo saying, I see Kelly saying, yes, we can see. Tepo saying, yes, I can see. Awesome guys, what's up? Let me also check who's in the building with us. Let's just see you guys. Please do me a favor and open up your guys' cameras if you guys are okay with that. Let me just have a look and see who's in the building with us, please. I see Mac there. Mac, what's up, Mac? Nice to see you there, my guy. Hopefully you have, where's your trading plan, dude? Where's your trading plan? Where's your trading plan? Ah, there's it, man. I'm happy. What's up, David? Nice to see you there, man. Oh, looking good, guys. So we're gonna get into things, guys. So I think to kick things off, guys, like I love this quote by, who is this guy? Earl Nightingale. He says that you can ask any sailor where's his port of destination, and he'll tell you like in a heartbeat. He'll give you the exact coordinates of exactly where he's going. And this sailor, for a fact, knows that for 99% of his journey, he's not going to see where he's going to, but he knows that if he executes a set of systems every single day, repeating the same set of systems, eventually that routine that he has going through day to day, eventually after repeating that system, one day he knows he's going to see the horizon of his port of destination. So it's exactly the same thing with us, guys. Preparation is like the penultimate of anything. And what this trading plan does is that this trading plan, guys, it's a real gift to psychology. Like anyone is facing like psychological things. Maybe not everyone is facing psychological issues, but I know I am. And this trading plan, guys, is really the one thing that I can say helps. It's like the magic pill of psychology is your trading plan. So guys, for us to begin with, what I'd like us to do is I'd like us to go through to our golden rules, guys. So we're actually going to be, the reason why I asked you guys to also have this printed out is because it's going to be very difficult for you guys to be jumping in between your PDF version and I guess the Zoom meeting to follow up. But if you want to do that, that's cool if you haven't printed out your trading plan. Otherwise, if you haven't seen what it looks like yet, please, under module 6, go and look for it if you're in the 3.0. If you purchase the webinar package, then you'll find it there, your third module right there. Anyway, guys, what I'd like us to start off with is I'd like us to go to the back of the trading plan. And in the back of the trading plan, we have golden rules. So there's 10 golden rules. And we're basically going to go through these golden rules. So you guys can see that I have like a general structure of what our trading plan looks like. And we're going to explain, I guess, all of these individual areas so that you guys can also build a trading plan on your own. So part of the point of the session is to show you guys also what are the important elements within a trading plan so that all of this still remains discretionary. If risk management doesn't appeal to you or doesn't click with you, then the point of this is for this to still be discretionary and for you to still be able to kind of change it and swap it around how you feel like you would like to. So going back, guys, to our golden trading rules, we're going to go through these rules, guys. Rule number 1, and you can add your own rules after these 10, make it 15, make it whatever. Rule number 1, guys, follow my written trading plan. So that's our first
golden rule of this. And if we can't honor these rules, we are not going to honor anything within these pages. So that's how important just giving yourself, committing to just following this is. So our rule number one is we're going to follow our written trading plan, guys. And rule number two, we're going to keep learning on a daily basis, because learning never stops, guys. Even if we're not learning from theory, we're learning from practicals as well. Must we write? Tep was asking, must we write on our trading plan? Please don't write on your trading plan now, but use this basically to understand how you're going to be filling in your trading plan. So really, let it be open up to your discretion. If your mind is working now and you're in that headspace of filling this out as we're going through it, then definitely feel free to start filling it out as these things are coming into your mind. But otherwise, if you know that maybe you might not, or you're gonna need some time to actually go through this, because myself, I didn't fill out this whole thing in a single day. It took me like a couple of weeks, and I'm still not fully done with my trading plan, because it's not something that you just think about. Like, for example, thinking about your income targets, maybe that's something that maybe you really need to sit and think about and kind of be realistic about. It's not something that you can just pull out of the air and say, okay, cool, I want to have $1 million because I want a Lamborghini, because I want this. Yes, you want those things, but this, what's going inside here, really honestly needs some thought. So open it up to your own discretion. You can start filling it out now, or you can wait and understand how you're going to fill it out and then take the time out later. So yeah, guys, you can always just send stuff in the chat. I'm going to be following up with what you guys are saying as well, so that we don't leave anyone clueless, because that's the point of having a webinar, so that we can also discuss as we're going through. It's not going to be like a YouTube video where you're just watching and you don't have any input if you're not clear on something. So you can just, please switch off the bell. Okay, cool. Let me do that now. No problem. There we go. Cool. We don't have any more bell. So our rule number two, guys, is that we're going to keep learning on a daily basis. And the reason why this is important, because learning is experiential. We learn through experience. That's the ultimate teacher of everything. Yes, we take some time to learn theory, but experience is really what teaches us in the market. Experience is what gives us awareness about ourselves and what gives us awareness about generally what we're doing in our whole system, our whole processes. Now, our rule number three is that we are going to cut losses short and we're going to let profits run. So that's our rule number three. Rule number three automatically implies, because we're cutting losses short and letting winners run, it automatically implies all of those things like risk to reward ratio and like keeping risk in check, because we need to be cutting losses and letting winners run. That just simply means smaller losses, bigger wins. Rule number four, guys, is we're going to protect and reserve capital, because that is fundamentally what we're doing as traders. As a trader, you're developing a skill and you're saying to someone, with this skill that I've developed, what I can be able to do is, number one, preserve your capital, and number two, make your capital return, give us returns. So whatever I invest on, we're going to expect a return on that investment. Number one priority is to preserve that capital. So that's our rule number four, guys. We're going to protect. Ultimate plan and ultimate goal of all of these pages is ultimately to protect and preserve our capital. Rule number five, guys, is that we're going to trade what we see and not what we think. So the whole point of this trading plan also is to allow us to create objective rules for ourselves. Because if we're trading what we think, then that includes a little bit too much discretion, especially if we're still developing into a trader. If we're not a developed trader as yet, that means we should be having more systematic processes and less discretion. And the more you become comfortable in what you're doing, then you begin to open your trading up to discretion. If you start off with discretion, you're starting off to kind of just take a longer route. That's just how I'll put it, because I won't say it's going to be a bad start, because there is no real bad start. Any experience is good experience when it comes to this, because that's how traders are built. Traders are built off their own personal experiences. I trade totally different to anyone else that I know because I'm an individual on my own and I understand things differently. So that's what we're going to do, guys. We're trading what we see and not what we think. So our rule number 6, guys, is that we're never, ever going to revenge our losses. Rule number 6, we're never going to revenge our losses. The reason being is because we want to protect our psychology. Rule number 7, guys, is we're always going to keep records. So that's also part of this. This itself is a record of your processes, is a record of your goals, is a record of your ambitions, is a record of your current state of mind. Guys, trading plan is more important than just the trading plan. People underplay the power of all of these pages. Let's go on to our next rule, guys. So our rule number 8 is that we're going to keep it simple and professional. Part of keeping it professional is having a trading plan. Part of keeping it simple is having your processes simple enough to fit within these pages. So we're going on to rule number 9, guys, is that we're going to be an above average trader. That's the plan of this trading plan. This trading plan is when I observe something in another trader, my intention is to whatever's in this trading plan should make me better than whoever I inspire to be like. That's the point of this. We're always inspired, we're always pushing to be an above average trader. Whatever your current point of is, wherever you are right now in trading, this is to take you to that next level. Now, rule number 10, and the most important rule of them all, guys, is that we are going to believe in ourselves and our processes, regardless of the result, regardless of the process itself. We are going to believe in those processes because that's how we make it. If I don't believe in my own processes, why am I even going through with the processes themselves? So that's where it starts. I have to believe in myself, the individual that I entrust to carry out those processes, and I have to believe in the processes that I'm creating for myself. Guys, now that we've gone through our golden rules, let me just check the chats. I see, hi, I'm still on module 2, but this will be a quick enough preview for me though. 100% it will be. I see Kutlo's also saying, hi guys, welcome Kutlo, nice to have you. So guys, what I want us to go through now is just the structure of our trading plan. Before we get into the details, let's go through the structure. So you guys will see that our trading plan is basically kind of how a business would run things. I am an individual. I don't have a red marker, so I'll just use yellow. So I am an individual, right? That's us, that's you, that's me, that's everybody. This is the trader that we are entrusting to run our business. So I'll just put a type of a house, whatever structure here, to say that this is us and this is our business of trading. Now, our trading plan is basically, first of all, if I am an employee, no, if I am an employer, if I am hiring people, what I want to do is I want to, first of all, understand the people that I'm hiring. I need to know, do other people that I am hiring fit enough to do the job? Do they have the right skills, the right qualifications, the right whatever? So point being, I need to first of all understand the individual himself that I am entrusting to do the job. Another thing is, obviously, we need to understand the business. So the business, we need to know exactly what the business is about, what we're doing, how we're getting our product, how we're selling our product, what's the risk involved, what's the potential gains, what are our processes. All of those things are involved in you running a business. So that's how our trading plan is structured. The trading plan is structured is that, or with the purpose of, number 1, understanding and developing the individual. Number 2, understanding and developing the business itself in terms of the processes that are involved in running that successful business. So you guys will see, our first section is knowing myself and my purpose. And as you guys obviously would see, is that refers to us understanding the individual themselves. Second section, guys, is market instruments, and our time frame. So we need to know exactly which markets we're trading, what instruments we're trading, and what time frames we're trading, because we want to define things as much as possible. Number 3 is obviously the tools of the trade. What are we going to use in our business? What are the operational things involved in our business? Number 4 is before the market opens. Now, obviously, even a business themselves knows that before they open for business, there need to be things that happen in the background. Is there stock? Is there, I don't know, money for change, or whatever the case is? There are things that need to happen beforehand, before the business even opens. And so that's what this places an importance on. Our 5th section of our trading plan is our processes of analysis and forecasting. So obviously we have, or as a trader, we go through a process. Happens obviously maybe before the market, we come, we fresh, we new, we here, we're looking at the market. Then after we look at the market, then we want to trade. And after we trade, then we reflect. And so this whole trading plan is structured, breaking down those individual sections and those individual processes. So we need to have a process of analysis itself. We need to define how we're going to look, analyze, and interpret that data from the market. Now, our 6th part of the trading plan is our risk and money management. So straight and forward, risk and money management, which means basically how are we going to manage our money and how are we going to manage our risk on that capital that we're trading? How are we going to handle that and how are we going to manage it? Now, we do have broken down, we have specific risk management, which deals more with your with your positions and your that kind of stuff, your risk tolerance. And then we have general money management that will kind of deal with how you're going to handle more, let's just say, more slightly of the emotional side of how you're going to manage your money. Then we have our exit strategy, which is obviously after we've analyzed, maybe we've assessed the risk, how are we going to exit this position? That will be an exit strategy, something that we need to think about before we even enter the position. Where are we getting out and how are we getting out? So that also reflects back on obviously risk, because we need to understand that every position we are opening, whether it's a sniper entry, whether it's a whatever, there is risk involved. Now we're going on to the 10th section of our trading plan, and that's our actual trading strategy, our setups, and our entries. That's also another process that we need to go through, that we need to understand. And then after that, after we've gone through this whole process, what are we doing after the market has closed? So any business, after the business day, they count their money, they make sure their books balance, they this, they that as well. We need to employ and we need to have the exact same processes, because this is a business that we are running. And if you're not approaching it like a business and you're approaching it like a side hustle, then you're going to get the results of a side hustle and not the results of a business. Now, the 12th and last section of our trading plan then deals with discipline, because there need to be certain disciplines that you hold yourself to. Like, for example, there are hundreds of different, of millions of types of businesses out there, but you'll find that even two businesses that do the exact same things, like maybe there's two carpet cleaning businesses or something of that nature. Those two carpet cleaning businesses maybe have two different sets of disciplines. Maybe one carpet cleaning business's discipline is to always look smart and to always present themselves in a good manner. And you'll find that maybe another business might not have that specific thing as a discipline, but nonetheless, disciplines are needed in every business, and every business will structure their own disciplines in their own way. And that's also something that we need to include in our trading plan. Now, we're going to get into our first section, guys. So before we get into it, let me just check the chats and make sure there's, okay, I think someone sent a private message. Okay, cool. Someone's asking, can I please adjust my camera? Just let me know how you would like me to adjust it. Would you like me to? I'm not sure how you would like me to adjust it. Maybe that's okay. Is that better, dude? Oh, welcome. I see Stellan in the building, man. Welcome there. I see you look like you're chilling in the Bahamas, man. Welcome, dude. Nice to have you guys. Let's see who else has their camera open.
Okay, no one else, no one else, no one else.
I was just kind of stalling just to see how this guy would like me to adjust the camera. Let's see if you, yeah, that's good. Okay, cool. Thanks, dude. Thanks, dude. Appreciate it. Cool. So let's get into our trading plan, guys. Let's get into our trading plan. So we're gonna start off with our first section, and that's knowing myself and my purpose, guys. So obviously the first point in this is, why do I want to be a trader? Now, we know that these are important questions that we need to ask ourselves, guys. Why do we want to be a trader? And with this question, guys, you need to be honestly, very brutally honest with yourself, and you need to give it some thought. I don't think your why is something that you can just pull out of the air, because if you're going to pull your why out of the air, then it means that your why is just a very generic thing, like maybe you just want to make money or something of that nature. But guys, think about your why very much, because your why is important. Your why is important. So occasionally, as we're going through the trading plan, I'm just going to make references as to how I filled mine out, and or if I don't have anything filled in that place, but I do for obviously like most of my trading plan, I still do have gaps here and there. But if I don't have anything in that place, I'm going to make references to how I've been trading or how we trade here at the Chasers. So nonetheless, we're still getting what's relevant to us here as the Chasers. So part of me knowing why I want to be a trader, I focus more on the qualities. So my simple answer to that was the qualities that most traders possess, like discipline, self-awareness, confidence, efficiency, productivity, organization, decisiveness, and open-mindedness are qualities that I admire for myself. And self-development is my primary objective. And being a trader allows me to go on that journey and be a better individual and positively impact everyone around me. So my real why is basically, I think in life, I'm just on a journey of self-development and self-discovery. So I feel like trading for me has just been another one of those methods to go through on that journey. And part of my why is to discover and see, what does this individual that I call Tremaine develop into? What are the limits that I can push this individual to? And that's part of my why. So obviously our second one is what kind of trader I am. And here, guys, we need to, first of all, understand we're answering this based off ourselves. What kind of trader I am? Yes, we could add something like I'm a swing trader or I'm a position trader, but really focus on your mindset. That's what this question is there to bring you to. What kind of person, what kind of trader are you in terms of your mindset? Now, I wrote here that logic and reason are my way of understanding information, and therefore I am a systematic trader who uses processes to govern the way that I make decisions. I do open my decisions I do open my decision-making process to discretion only once logic and reason allow me to do so. So I'm identifying how I reason, and that's the kind of trader that I'm defining myself as, depending on how I see things, how I do things, what's natural to me. So we'll go on to the third question of our, basically still our first part, guys. We're still knowing ourselves and our purpose. So then third, obviously we go on to what are our strengths and our weaknesses. And we all know why this is important. And the reason why this is important is because that understanding our strengths and weaknesses allows us to tailor our trading plan. Whatever your strengths are, that's what you want to play on. That's what you want to have your trading plan emphasize on. Whatever your weaknesses are, that's what you want to have your trading plan develop and cultivate. Because remember, this is to make this person more competent to do the job. That's what this is for. So generally, my strengths and weaknesses, so I just have basically self-awareness, and just awareness in general is my biggest strength, because that's what gives me the ability to evaluate and adjust my things. My contradicting weakness is that the time that I take in between when I'm aware of something and when I evaluate it and when I actually make my adjustments is just a little bit too long. And so I've identified a weakness, and I've identified a strength, and I've identified a contradicting weakness. So yes, I have this strength, but what's the weakness that this strength has? What other weakness do I have? So that I know what I should be playing on, that, okay, cool, I'm an aware person and I know how to do this. Oh, damn. But now that I'm aware, one of my weaknesses is the time that I take from the time I'm aware to the time I make a decision based off whatever I'm aware of, that time is too long. And so there needs to be an adjustment in my processes to allow me to make those decisive decisions a lot quicker and whatever else. So I've identified a strength and a weakness. And the point is to work on the strength and then obviously develop the weakness. So how will I work on my strengths and my weaknesses? That's our fourth point. And then obviously my dedication to this training plan is my way of acknowledging my strengths. And the plan is going to be structured for me in a way that allows me to function within my strengths. My training plan will also include guidelines and rules that will make me improve on my weaknesses. So that's exactly me just answering the question, how will I work on my strengths and weaknesses? Simple as that. So we'll go on to our fifth point, guys. And our fifth point is, what healthy headspace do I need to be in when approaching trading? Simple, clear answer is, that every trader needs to be in a clear headspace, a headspace that someone can be able to make decisions, that someone can be able to make clear, concise decisions, that someone can be able to kind of interpret data without any external influences or without any, I guess we'll leave it at that, without any external factors influencing that decision. So that's kind of maybe the headspace that a trader would want to be in, but you need to identify for yourself what headspace do you need to be in, because it's all different for all of us. Maybe someone else wants to be in a nice, pumped up, energized headspace, maybe bodily feeling or whatever, and maybe someone else wants to be in a calm headspace and they listen to classical music or whatever the case is. It's very subjective, guys, but define and identify what headspace you need to be in, because like anything else, maybe a runner or whatever, everyone visualizes. Let me give you guys a tip, the secret to success, so that you've heard countless times, the law of attraction, the secret or whatever. Everyone visualizes, and even a runner that's running a race, their mind is on the finish line. When they're laying in bed or whatever, they're imagining themselves going through the finish line and winning. And this training plan or whatever, like identifying the headspace that you need to be in, is already you imagining that goal, you imagining that future state. Now that you have it in your mind, you'll always be able to recall on that. And that's why we still need to identify and define as much as we can define, guys. The more detailed the plan, the better your results are going to be from this, or the whole intention behind your actual plan. So number 6, guys, how will I ensure that I am in this headspace as often as possible? And here you'll obviously, whatever things you want to do, like for example, for me, I've got mindfulness will be my daily practice. I'll always self-introspect while I'm going through my processes. So I have call to actions, I call them step backs, where whenever I hear myself, if for example, I'm in the process of trading, maybe I'm about to take a buy or a sell on whatever, I have this thing where the moment I realize that I'm thinking, I ask myself, whose voice is that? Who's speaking now and telling me, okay, enter the position now. Okay, wait, don't enter now. It's going down, I always ask myself, whose voice is that? And that allows me to kind of step out of the situation and then re-look at my logic, re-look at the reason. And if that then aligns the logic and the reason, then I can make a more sound decision without that voice in my head that's shouting two different things at the same time. I don't know why it does that, but it's shouting two different things at the same time. Now I can step back from that process and then re-look at it from the outside and make a much more clear, concise decision. So you need to identify the headspace. And like number 6, our point number 6, how often will I ensure that I'm in that headspace? You need to have a way of getting into that flow state of realizing yourself while you're in your processes of trading. I saw a chat. I see Lizzie saying, why I want to be a trader? Simple. I want money. Money, machankura, period. That's why I'm putting in the work. It's what I have to do. That's a beautiful why. That is a beautiful why. And that why is enough to inspire some people. Some people need a much deeper why, but other people need a why that's like money is a deeper. I'm not saying that there's levels of which why is deeper or which why is not deeper, because it's all subjective at the end of the day. But what matters is that you have that why. And I'm glad that you have that why, because that why is going to keep you going in the long run. But otherwise, big ups to that, Lizzie, big ups to that.
Whose voice did you hear? Whose voice do you hear at 3:30 every day? It's my voice this side and Mamba's voice this side. If they both shout the same thing, then I'm pulling the trigger. But if they're both shouting contradicting things, then I'm just sitting with my hands under my armpits. That's all I'm doing. But it's my voice and Mamba's voice to answer your question. So we go on to our point number 7, guys. We're still knowing myself and my purpose. So point number 7 is, what are my income targets? Now, it's purely subjective. You obviously need to be real and really look at your circumstance. So my income targets are based for this year, and I'm not gonna read it out because you'll hear how ridiculous my numbers are. But as ridiculous as these numbers are still taking into account my current circumstance. These numbers that I have here are not the same numbers that I had last year. Last year, when I had a trading plan, my numbers were so much more ridiculous than these numbers here, believe me. And yes, that was a goal. Your goals are supposed to be massive, but it wasn't realistic. And I was not able to even break that goal down into a daily target. Like my goals, for example, just say my goal was to make $1 million. How do I even break $1 million into a daily target with a $200 account? Was that goal honestly realistic of my situation, of my circumstance, of my current ability? It absolutely was not. And so that's why this is still here, because you need to define these and you need to look at your current circumstance and then give yourself a realistic goal. Even if that realistic goal is making $1,000. Did you make $1,000 last year? No. So this is still you being better at being, or rather, this is still you striving to be a better person than you were last year, but without the pressure that you put on yourself last year. Now you're moving towards a goal, and every time you realize those small increments, it makes you feel so much better about your process. And that's what you want to do. You want to cultivate a good, this is all that this is about. It's just about putting yourself in that headspace. It's just about making everything start in your head before you actually realize it and before it becomes something that's material. And so even something as simple as creating a realistic goal that you can achieve in small increments that will make you feel better and that will drive you more, even that is you becoming a better person, guys. So just define your income targets, but make it realistic, please. What are my annual trading goals? And so this is obviously, I did this personally. My trading goals are obviously centered around me trading with prop firms. I have goals of what size accounts I want to trade. I have goals of what portfolio, what size portfolio I want to trade, because I told you guys that I'm not about this wasting money kind of life. When I do, and it's very rare, but when I do withdraw from my Forex account, it's not for me to take my girlfriend out to McDonald's. That money is for me to go and buy something. Let me go rather buy Capitec. Let me go rather buy MTN. Let me go rather buy whatever. Buy a stock. So I also have goals on my stock portfolio, and I have goals for this year on what my stock portfolio must be. And these are my annual trading goals, because everything in here, this is not for personal life and whatever. This is everything that is in here should be purely specifically related to trading. Only trading. So even strengths and weaknesses, public speaking is not your weakness if public speaking is not part of your trading processes. Let's go on to our point number 9, guys. We're still in understanding ourselves and our traders. So what are our monthly trading goals? Obviously, you break that down, whether you want to define it as a percentage, which I suggest, or you want to define that as a monetary value, define your monthly trading goals. 10, what are my weekly trading goals? So obviously you're breaking the processes down so that you give yourself realizable, actionable goals that you're working towards. Number 11, what are my trading goals? What are my daily trading goals? So I'll read you guys my daily trading goal. My daily trading goal is to consistently make an average of 1% in a day. That's all I'm looking for in a day, and I'm happy. And to realize 1% in a day, how easy is that goal to achieve every day? How good do you feel when you get 1%? How bad would you feel if you're aiming for 5% and you only made 3? You're still feeling like you undershot your goal. How much better do you feel if you got a good trade and you made
6% on a day and your plan was to make 1% in a day. You hit your whole weekly target, maybe 1% in a day. So break your goals down into things that will push you here, things that will make you feel amped for this process of trading, guys. Let me just see. I saw a chat coming in. I saw a message. I see Farai is asking, give me top 3 stocks. Give me top 3 stocks. This is not about stocks, guys. This is not about stocks. This is not about stocks. We're trading the financial markets here. We're not looking at stock markets. But just a hint. I'm looking at South African companies. I'm not investing in companies abroad. I've only been buying South African companies because, yeah, local is lekker. Anyway, guys, so oh yeah, we've gone through what are our daily trading goals. Cool. Now we're going on to the second part, which is defining our markets and instruments, guys. So the first point would obviously, or point number 1, I hope you guys are either looking in your hard copy or following with your reflecting in between your PDF that you downloaded. So yeah, your point number 1, guys, is which markets will I trade? So you need to define what markets will you trade, and what this means is that you're defining whether you're trading Forex, whether you're trading stocks, whether you're trading futures, whether you're trading metals, whether you're trading oils, whether you're trading indices, whether you're trading synthetic indices. That's what you're defining. You're defining what financial assets, what markets will I trade? That's what you're defining. So you know that when you see people making $60 million from VIX 75, you're not just jumping in there. You've already defined your circle of competence. You're sticking here. This is where you're comfortable. This is where you're developing your skill. You're not going to develop here and jump somewhere else and be a beginner again and see someone else making money somewhere else and jump somewhere else and be a beginner again. You're going to stick to your circle of competence. So I saw a chat, which PDF, the trading plan PDF, which is underneath your module 6. Underneath your module 6. Cool. Now we're going on to the second point, which is which instruments will I trade? So you've already described for yourself that, okay, cool, I have here that I'm trading Forex, I'm trading indices, and I'm trading synthetic indices. Yes, guys, I do trade VIX 75. I do trade VIX 10. Those are the 2 synthetic indices that I trade. Not all the time, not consistently, but I do trade them. I do like to trade them, and that's why they're here. So which markets will I trade? I've defined for Forex, I'm only trading Aussie CAD, Aussie Swiss franc, Aussie JPY, Aussie US dollar. You guys know the pairs that I trade. For indices, I'm only trading US 30. For synthetics, I'm trading VIX 75 and VIX 10. So I've defined every instrument that I'm going to be trading. I see, thanks, Doc, strategy of breaking down goals so as not to feel like you're underachieving. No props, Farai. I'm glad that's hitting home. I'm glad that's hitting home because it hit home with me too. When I realized that it doesn't make you feel good when you have such a big goal and you never ever get to it. It doesn't make you feel good. You feel a lot better when you have a lot smaller actionable steps that are actually achievable, like realistically achievable. It makes you feel a lot better and a lot pumped to go through the process. So I'm glad that hit home too, because that's going to change a lot about because goal setting is important, and change how you feel towards your process of goal setting. You're changing your whole process, your whole outlook on your process itself. Big ups, bro. Big ups, bro. So number 3, obviously, we have here which timeframes will I trade. So which timeframes will I trade? You guys know that I have 2 different outlooks that I'm looking at. I obviously do analysis looking at a long-term outlook and a short-term outlook. So I've defined for my long-term outlook which timeframes I'll be using and for what reasons the daily, for what reasons the 4-hour, for what reasons. I've also defined for my short-term outlook what timeframes I'm using, the daily for what reason, the 4-hour for what reason, the 15, the 5, and the 1 for what reasons. And yeah, and I've done that specifically for my indices because obviously everything is different. For Forex, I have certain timeframes that I'm looking for certain things. On US 30, those same timeframes, like I'm looking at the daily for directional bias. For US30, I'm not looking at the daily for directional bias. I'm scaling down the time frames a little bit more. Now I'm using the 4 hour as my highest time frame, whatever the case is. So I have it down specific for that specific thing. For synthetic indices, it's totally different. Again, and I have it defined. So that's the point of this. Let's go on to our third point, guys, and that's now the tools of the trade. So question number one, guys, obviously, which broker will I use to trade? And why this is important is so that you guys can go and look at why a broker is important. If you're trading VIX 75, will you need to open an account with Veracity? No, because that broker doesn't meet your requirements, doesn't meet your needs as a trader. So after you've been defining your goals, defining the types of trader that you are, defining the time frames that you're using, defining the this, all of that information you can use. Obviously, if you're on those lower time frames, doesn't make sense for you to be using an account that has spreads like a standard account. No, because you're scalping and your trades are 5 pips, 4 pips, and spread is already 10 pips. It's not conducive for the way that you're trading. Now you know that when you're looking at a broker, because you've defined yourself, find a broker that will allow you, because you're a scalper, because you only have a 5 pip stop loss or a 3 pip stop loss, find a broker that will give you a zero spread account or a fixed account or an ECN or whatever that will accommodate the type of trader that you are. So go look, which broker will I use to trade? Define that. I know that I have here, my primary broker is Exness. I also do use Veracity and IC Markets for secondary accounts. And I also have here, because I'm trading with prop firms, I have here that I also use the brokers that are provided for me by prop firms, which I obviously have no control over because that I can't decide. So define it all. So number two, guys, which trading platform will I use to execute trades? Very simple and straightforward, guys. I use my MT4 or MT5 platform to execute trades. And you still want to have that defined because some people use what that CM, whatever. Some people, maybe if you're using Exness, they have a terminal inside over there that where you can buy and sell and whatever the case is. Even that is being inconsistent with a terminal, and you don't even realize that that inconsistency maybe just confuses you, or now you have to restart learning how to be okay with a new platform, whatever the case is. Define which trading platform that you're going to use to execute your trades. Number three, guys, which software and charting providers will I use to view the instruments that I trade? And you guys know in the Chasers we use TradingView. So there we have it. TradingView is the software that I'll use to view all my charts on, and Oanda is going to be my charting provider, because aside from you having a platform that you're viewing charts on, go on TradingView, type in Euro USD, see how many different Euro USDs are there. The reason why there's so many is because there are different charting providers. So go and find the charting provider that you feel comfortable with. If you trade all of those gaps and whatever and expecting gaps to be filled, then maybe FXCM is an okay charting provider for you because they have gaps. Otherwise, I don't like gaps. I use Oanda. Oanda doesn't show any gaps on our chart. So go and define what charting provider you're also going to be looking at, because even that can cause inconsistency. You go and look at Euro USD using Oanda, and then you buy whatever and the case is, and then you go and look at Euro USD with FXCM, and the structure might just look a little bit different and confuse you or make you inconsistent with your process. So even have one charting provider, just so that you can develop that consistency. Let me just double check the chats. Cool. Let's make sure there's no private messages, because I see some people send the private messages. Okay, no private messages. Cool. Let's keep going. So guys, now we're going on to our point number 4, which is before the market opens. So this is our pre-market whatever, pre-market routine, pre-market whatever. So obviously, before the market opens, what do we need to do? We need to analyze and make sure. That's our question number 1, guys. What is my weekly analysis routine? So referencing to my own trading, guys, I have the English. Anyway, referencing to my own processes, guys, I have a weekly analysis routine where we honestly do analysis with you guys every Saturday. But obviously, after I do the analysis with you guys, I then go on my own and I sit and be quiet and then redo my analysis to see if I still see the same things, if I still feel the same way about the stuff that I'm seeing on the charts and whatever, and where I have my support and resistance, making sure that my levels are valid, that my this is this, that my bias is this, that making sure I really understand what I'm doing. I still do my own analysis on the side. So I have a weekly analysis routine. So you're obviously going to define whatever your weekly analysis routine is. Then number 2, guys, what is my daily pre-market routine? So every day before you get to the market, this is before the market opens. Yes, we know that the market opens and it's open for 5 days in the week, but your business hours, every day, your business hours, you start trading at a certain time and you end trading at a certain time. So you have an open and a close. And obviously, if you have an open and a close, you have what happens before you open. So you still need to define, you have to have a routine, a pre-market routine that you're obviously going through before the market is open. So you define that. I know I look at the markets, whatever, before 9, at 9 o'clock, I start trading from 9, all that stuff. I know which time frames I'm looking at because I've defined that in my short-term outlook. Remember when we're defining the time frames that we're looking at? Obviously, you define that, and now you know your weekly analysis routine, which time frames you're using, whatever. Your daily pre-market routine, you know which time frames you're using because it's now shorter increments. You need to be on those smaller time frames. So you've defined all of that stuff for yourself. We go on to the point number 3, and that's, remember, this is before the market opens. This is one of the things that you need to do before the market opens. Number 3, have I reviewed yesterday's trade? If you're trading today and you didn't think about what happened yesterday, guys, red flag, please stop, because that just means that already you are inconsistent with your process of documentation of your understanding of reflection of yesterday. What are you learning if you're trading today and you didn't even reflect on yesterday's trade? So question number 3, guys, have I reviewed yesterday's trade? So you're going to create something there for yourself that will allow you to review your trades or whatever the case is. Number 4, do I have any trades open from the previous trading day? So you're going to write there, if you do have trades from the previous day, what are you going to do about it? If you don't have any trades from the previous day, then how are you approaching your new analysis? Do you work off old biases? Do you whatever? Do you start afresh? Define that. So number 5, guys, what are the general market conditions that you do or don't trade? You need to define that. For example, someone that is a trend follower, someone that trades those trends, does a consolidation have any consistent trends? No. So you know that maybe consolidations are not for you. So if that's the case, you better define that. For me, obviously, I know corrective structures are where I look for my entries, but I don't like to trade inside of them unless I have structures. So even that, define it for yourself. We'll go on to our point number 6. Let me just check. Okay, yesterday's trade is vital, should be standard for all chasers. Yeah. We're gonna go through the trading journal at the end of this, guys. We're gonna go through the trading journal. So number 6, guys, what will I do daily, hour by hour? So just define a process for yourself that you're doing daily, what time you're approaching the markets, what time you're gonna analyze, what time you're gonna do this. Please, guys, involve times, because times are gonna make you, times are going to add pressure on you to actually do it. If you say, for example, what will I do day by day? If you say, I'm going to give it in the same order. If you say meditate, analyze, trade, and journal, and there's no times involved, you're not going to be consistent with a process. Maybe today you meditate at 10, maybe tomorrow you meditate at 6 in the morning, maybe the next day you wake up late and it's already 10, and then you're thinking, okay, crap, now I need to trade. And now you've missed out your meditation part because you didn't define a time. And so put times on these things so that it can help you develop consistency towards them. So what will you do daily, hour by hour? And this is your trading day, because remember, this is your business. This is not involving Saturday and Sunday and whatever else. Or if you're trading on Saturdays and Sundays, then you're involving that process as well. But define your days. What do your trading days look like? Even if you have a 9 to 5 and you're still studying, trading, or whatever, define that from 8 o'clock to 9 o'clock, this is the time that I will reserve for self-development in terms of trading, whether you're learning, whether you're backtesting, whether you're doing whatever. So number 7, guys, what instruments are on my watch, on my daily or weekly watch list? So you're going to define how you are going to separate those instruments. How will you go through a process of elimination? Yes, I have 8 pairs that I'm looking at every single week, but still, what instruments are on my daily watch list, that I still need to define. So I need to have a process of elimination. Okay, maybe I only take the setups that produce, or rather the setups that are in my entry zones. Maybe those are the only setups that I look at for the day. Or maybe I can say the setups that are in my ascending structures or in my corrective structures or at reversals or whatever. You're just defining how do you put those instruments on your watch list, whether it's your weekly watch list or whether it's your daily watch list. What do you need to see to put those things on your watch list? Cool. So guys, we're done with our before the market opens. Now we're going through our process of analysis. So remember, we're going through this like the same way we trade. So it's Sunday, we analyze first, whatever we do, we know what we're doing on Monday. It's Monday, we analyze whatever, or rather we analyze, we need to define this process of analysis and forecasting. So question number one, guys, is what is my process? Geez, English. What are my, let me read this slowly. What is my analysis process that I follow weekly and daily? Actually, the English had me there. But what is my analysis process that I follow weekly and daily? Obviously, you've already defined the time frames and all of that stuff. Now you just need to define what is the actual process. Okay, cool, I analyze this. On a weekly, I use these time frames for this reason, whatever the case is. So what time frames do you use for analysis? Because remember, this is not involving your entry. So if you, for example, maybe in the previous thing had that you use the 4 hour for the daily for directional bias, the 4 hour for structure, the 1 minute, the 15 minutes for entry and whatever. This is not involving entry. This is you defining your process of analysis and forecasting. So what time frames do you use for analysis? Obviously, you put them down and define what you're looking for on that time frame. What is your process for forecasting? So for forecasting, you guys know that I only need 2 things in my forecasting. I just need a directional bias and an identifiable call to action. And that's all I have here, that my process of analysis involves me finding a directional bias and identifying a zone where I will be looking for a potential, looking for a potential identifiable call to action. So define what your process for forecasting is, because forecasting and analysis is different. Analysis is looking at the data, understanding the data, and creating a story about the data. Your forecast is what you're anticipating about what you've analyzed and about that story that you've built and understood. So a forecast is not a fact. Your analysis is the fact. Your analysis is the story. This is what's happening. Your forecast is saying, if, then. That's a forecast. The forecast is your own assumptions. So there are 2 different things. You need to define them both. We're going on to, guys, our next process, and that is risk and money management. So with risk and money management, guys, question number 1, what is my attitude towards risk? So you definitely, like the question obviously suggests, need to be assessing what your attitude towards risk is. How do you feel about risk? Are you okay? Do you like big risks? Do you like small risks? Even that you need to define, because I can't come here and tell you to use 1% of your account and you feel okay risking 5 or 10%. Trading is purely discretionary. Yes, there are guidelines, there are rules. The reason why there are guidelines and there's rules and we say these things is because we've tested them and they've worked for us. But just because they work for us does not mean they work for you. And that's why this is there for you to fill it out in your own way, what feels comfortable for you. So whatever your attitude towards risk is, that's what you're putting there. Number 2, guys, what is your maximum risk exposure? So define what is the total, when are you gonna call it quits, guys? What's your maximum risk exposure? How much do you need to lose of your capital? When you deposit that $100 account, how much of that $100 account do you need to lose before you know that things are not working out? Or do you wanna blow it? If you want to blow it, but define a maximum risk exposure. What is your end all be all? Okay, things are not working. I need to go back to the drawing board. Okay, guys, what is my maximum risk exposure per instrument trading? Obviously, you need to know when you open a position, when do I call it quits? How much do I need to lose on this one position to know that this position is wrong? That's your maximum risk exposure per trade. Now you guys know we say 1%. Whatever, risk a maximum of 1% to 2% per trade. That's a risk exposure. Define it for yourself. If you have a $100 account, you're not going to risk $1 per trade. So obviously, maybe you're going to risk $3 per trade. So now you know you have a maximum risk exposure per trade of 3%. So define it for yourself according to your situation, according to the amount of capital that you have, according to your own risk tolerance. Let's go on, guys. Let's go on. So we're going on to number 4. Let me double check that there's nothing in the chats. There's no other messages for us here. Okay, I see something. Okay. Oh, wait, I see Stellan is saying legend. Oh, I'm banging things here. Dude, you see now, you're confusing me here. You're making me stumble. You're making me blush. Dude. Don't say things like that. But anyway, guys, let's get on to number 4. So what is the software and hardware risk management? So we're still talking about risk and money management. So what is my software and hardware risk management? Software and hardware risk management, let me tell you guys, this was the first time that I ever came across something like this. I did not even know that it's possible to plan for the management of your, or rather the risk management of software and hardware. What do we mean by software? What happens if your MT4 stops working? Do you have a backup that you can go back and still trade and still be able to trade? What happens if your broker decides to close down? Do you have a backup to try and still go back and be able to trade? That's you assessing that side of the risk. Hardware risk is obviously, what are you going to do if there's load shedding? Like you guys know me, where I stay, I'm fighting electricity. So I ration my battery life. Now I know about hardware risk management. Being able to ration, talking about management. Let me make sure my phone is actually charging. Speaking about that home. Okay, speaking about that, do you have maybe an extra power bank or whatever that if your phones are 1% and there's no electricity that you can plug because you have a trade running and NFPs in 5 minutes? That's part of you managing your hardware risk. There's a risk of your MT4, your phone switching off, or your whatever switching off, and you not being able to attend to something that you really need to attend to. So you need to account for those things. Obviously, situations are different. You would have your own different software, whatever backups. You would have your own different hardware, whatever backups. So cool, guys. Number 5, what is my strategy risk management procedure? What this means, strategy risk management procedure, a lot of big words, guys. But all this means is that when do I know when my strategy is not working? Do I have a maximum amount of trades? Do I have a maximum drawdown? Do I have a whatever to determine when my strategy is not working? Remember, even the strategy that you're using is a risk, and there is a potential reward on the risk that you are taking by using this particular strategy or whatever strategy that you're using. So you need to manage the risk that your strategy itself gives. So that's what this is about, guys. Question 5, obviously you need to back test for some of that information. So more work, guys, go back test. Anyway, let's get on to, we've done our general risk, just general risk and money management. So let's get on to specific money management, guys. So specific money management, like I told you guys, is going to deal with more of the things that are specific to our trades and our executions and those types of things. So what are the probabilities of a successful trade? Would you know this if you have not back tested? Probably not. So that implies that you need to go and do the work, guys, and that you need to back test to know what the probabilities are for a successful trade. Don't listen to me telling you that the Forex Chaser strategy has a potential win rate of 70, whatever percent. Go and test it for yourself. That's the only way that you will know whether you are able to execute the same thing the way that we are able to execute it. Because me saying that trading rising wages has a 70% win rate doesn't mean that you're going to win 7 out of 10 times, because the way that you might execute that process of identifying one, of executing on one, of managing that trade, and of exiting well might just be different. And so different processes imply different results. So go and define, go and see what are the probabilities of a successful trade and fill it in. So cool. What is your, I almost said maximum. What is my risk to reward ratio? So define a minimum risk to reward ratio for yourself. Maybe I might say 1:3 minimum risk to reward ratio, but you might find that you maybe only focusing on US30, and every time you have a 1:3 risk to reward ratio, you can stop out at break even. But most of the time, when you have a 1:2 risk to reward ratio, you get TPs. TP is one way, a couple of losses, maybe your win rate increases by having a 1:2 risk to reward ratio. Don't listen to anyone that says that says one size fits all, because it honestly doesn't, guys. It honestly doesn't. Define a risk to reward ratio that's comfortable for you. The reason why this question is there is so that you can go and find out why does a 1:3 risk to reward ratio work for certain people. Why does a 1:1 ratio not work for certain people? And define what works for you. Because a 1:3 risk to reward ratio might make me money, but it might lose you money, maybe because the pair that you're trading has a small daily range and doesn't get to 1:3 and always reverses whatever. There's a lot of circumstances that can influence why you would do a certain thing. So go and define, go and backtest, go and get that information, guys. So number 3, guys, what is my max risk exposure per trade? And I think we already defined that in the second question. This seems very redundant for me now that I'm looking at it again. Cool. So number 4, guys, how will I determine my stop loss placement and what's the general range of my stop loss orders? So you've defined the timeframes that you're trading. You've defined your entry timeframes. Now, based off your entry timeframes, go look at the pairs that you're trading. If you want to have a range or stop loss of a range of in between 10 and, or let's just say in between 1 and 15 pips. Let's just say you're a scalper and you know your stop losses are in between, let's just say 1 and 5 pips. And then you've been trading Aussie CAD and that's just been amazing. Aussie CAD is beautiful. You've been trading Aussie CAD and it's just been working out for you. And then you go to GJ, you backtest GJ, and GJ is beautiful. And now you think you're gonna go to GJ with a 5 pip stop loss with a range of in between 1 and 5. Guys, it won't work because GJ, obviously, maybe the pip size, everything is just exaggerated on those pound pairs. Don't know why, but everything is just exaggerated there. And obviously that won't work. So define a range. If you are swinging, what's your range for a swing? Like I have here my defined, anything in between 1 and 15 pips to me is either a scalping position or a day trade. I'm not expecting to hold that kind of a position for more than 2 days or whatever the case is. Any stop loss that is more than 15 pips and less than 45 pips to me is determined to be a swing trade. So you guys can see that my stop loss range is defined. All my stop losses are in between 1 and 45 pips. But within that, I know when I'm scalping and I know when I'm swinging. I know when I'm day trading, depending on the range of my stops. So I've defined that. And obviously, how will I determine my stop loss placement is you determining whether you're going to place your stop losses based off a fixed value. Like some people scalp and they like to just say, every trade, I'm just going to have a 10 pip stop loss or something like that. That's you still defining it. The point is just to define it. I, on the other hand, trade based off structure. So my stop losses, obviously, I will determine the placement of my stops based off structure. Number 5, guys, when will I stop trading? When will you stop trading? Let's see if someone gives a response on when they will stop trading. But when will you stop trading? I will stop trading after I had a long drawdown. I will stop trading after a very big win. I will stop trading after something that makes me psychologically unstable. Let's just say something that makes me emotional and takes me out of my flow state when I'm trading. That's when I'll stop trading. So define when you will stop trading, because that is going to be important. Define here that after you take 3 losses, you'll stop trading, and you'll find that day, remember last week, you took 7 losses and you kept on going, trying to make it back. Now that you've defined that you will stop trading after 3 losses, see what a difference that makes to you preserving your capital. So go and define when you're going to stop trading. Number whatever, let's see. Number 8, guys, we're going on to our general money management. So how do I handle large drawdowns and profits? So a large drawdown, how would you handle that? Would you maybe stop trading? Would you maybe lower your lot size? Would you maybe decrease your risk percentage? And how would you handle maybe large profits? Would you decrease your lot size after a large profit? Because I don't know, some people feel like, yes, I'm on a roll, and then the lot size goes up, and you guys know how that ends. But yes, just define how you would handle your large drawdowns and your large losses so that you know that when you do actually face something like that, because yes, it's going to happen. It's going to happen. Even if you're practicing good risk management, there's going to be that time where you lose 6 or 7 trades in a row and you're down 6 or 7%. And that's not nice. And that's a large drawdown. And you need to know how you're going to handle that. Will you keep trading? Will you stop? Will you take a break? Will you take a week off? Will you take a whatever? Let's go on to number 2. How will my money management change as my account changes? And this is something that some people leave out, including me. When I had my previous trading plan, I didn't even know to include this, guys. So how will my money management change as my account changes? Maybe your money management is based off percentages, then beautiful, you're doing well, you're doing wonderful for yourself. If your money management is based off percentages, why? Because percentages don't change. 1% of 10 Rand is 1%, 1% of 10 Rand, the ratio will remain the exact same as 1% of 100 Rand, as 1% of 1,000 Rand. The ratio remains exactly the same. So you know that you're risking a consistent amount or whatever the case is. But if, for example, you're busy based off monetary value, which I do sometimes if I'm starting maybe a small account or whatever the case is, then I'll obviously base my risk management off monetary value. And if it's based off money, then obviously maybe I'll say something like, okay, cool, I'm on $100. Maybe when I get to $150, I'll increase my lot size from 0.02 to 0.03. And every time I make $50 on top of that, I just increase my lot size by 0.01 or something like that. So when your account size changes, whether it's going up or whether it's going down, how are you going to change your money management in accordance with your capital? Cool. Number 3, guys, how will I secure my profits on a winning trade? How will you secure? Will you partial out? Will you trade your stops? I can't give you a nice silver pill. What I can say is that everything works and you need to find out what works best for you. Maybe you're trading GJ and GJ just gives those nice impulses. And so partialing out based on percentages is not going to work for you because you'd make a lot more if you kept your 0.10 position and you just trail stops instead of partialing out maybe 0.05 or 0.010 and now you only have 0.05 and that's one of those trades that hits 100 pips. So how will you secure your profits, guys? Look at the pairs that you're trading. If your pairs are stuck in ranges and there's small ranges and there's whatever, then partial out. If your pairs are trending and they move a lot or whatever the case is, then trail stops. But otherwise, determine how you're going to secure profits. Number 4, guys, how will I determine my position size for trades and scale in trades? So your position size for trades, obviously you define your max risk per trade. Maybe let's just say I'm going to risk 1% per trade. But now, how will I determine the lot size or the risk percentage for a scale in? For example, for me, I will never scale in bigger than my initial entry. If my entry, maybe I entered 0.10 on a buy or whatever, when I'm scaling in maybe at 0.05, maybe at 0.02, maybe at 0.03, whatever the case is, my scale ins are always smaller at a smaller percentage than I took my initial entry on, just in case the scale in reverses, I still make something. So determine your percentages as when you're entering for the first time and as well when you're scaling in. Cool. I think we're moving on to exit strategy. That's it. So guys, we're on number 9. Let's see if there's anything in here for us. No, I don't see any chats or whatever. Cool, guys. So we're going on to our 9th section of our trading plan, and that's our exit strategy, guys. So question number 1 of our exit strategy, or at least point number 1 that we need to define, is for losing trades. Losing trades,
will I exit before my stop loss is hit? When you're in a losing trade, will you ever exit before your stop loss is hit? If your answer is yes, then define the reasons that will give you that reason to exit your trade. For example, maybe you can say, will I exit before my stop loss is hit? Yes. If price has consolidated after 6 bars on my entry time frame, then I'll open myself up to exit before my stop loss is hit. If price impulses or bearish engulfing, if I'm gonna buy bearish engulfing, then I'll exit my trade or whatever. Define when and why you will exit if your trade does not hit stop loss, because we're trying to develop nice, good psychological, healthy, whatever brain stuff, all that good stuff. We're trying to develop all of that nice stuff. So remember, we only want to exit our position at stop loss or at TP. We want to try and stop fiddling and doing things and closing when I see $2 because my heart is pumping. We want to try and cut all of that out. So exit strategy, guys. Will you ever exit before your trade hits stop loss? If your answer is ever yes, please define those reasons why. Now, for your losing trades, what will allow me to close? Okay, cool. That was the second question anyway. So what will allow me to close a position before it closes at stop loss? That's when you would then define if your answer was yes or if your whatever was yes to the previous question. Cool. Number 3, guys, for your winning trades, will you exit before your take profit is hit? Then you're obviously going to say that for your winning trades, what will allow you to exit? Okay, cool. I see here what we are doing. Will you exit before your take profit is hit? If yes, then you're going to define how, maybe because you're partialing out, maybe because your trading stops, because that's also exiting before your take profit is hit, because that's what we're talking about. You can also exit at stops. So that, guys, next we're going on to for winning trades. What will allow me to exit completely? You obviously define that either maybe stop loss or either maybe take profit or either maybe a news event coming up. That's also another reason for you to exit your trade completely. You need to define these things, understand the way that you trade and the way that you're comfortable. And then when will you ever exit completely, or what will allow you to exit completely? For winning trades, guys, what will allow you to close the trade partially? So what will allow you to partial out? Maybe structure, maybe percentages when the trade gets to a certain percentage. I do see. What about exiting too early? That's what we're defining here. That's why if you're going to close that trade manually, there needs to be reasons. If you see a bearishing, if you say that after I buy and I see a bearishing engulfing, I'm going to close my trade out early. Is that exiting too early? No, because you waited for something that you had to see on the chart before you made that decision. But if you didn't have a reason why you would close that trade and you just felt like, oh, it's this red, oh, I don't want to see this red, it's making my blood pump, and you just close that trade. Now you've just messed up the statistics, you've messed up everything. You've spoiled it for yourself. So even if you are going to exit before maybe stops or take profit, define what will allow you to make that decision. The point is that you're not making decisions based off what we feel, but we're making decisions based off what we see. Remember one of our golden rules, I think it was rule number 4, rule number 3, trade what I see, not what I feel. That's that. So I saw another question here. When is the best time to put stop loss at break even? So we're not answering those kind of questions. We're going through the trading plan. When is the best time to put stops at break even? Define that for yourself. Maybe you can say when price gets to 1%, I'll move my stop to break even. Or if price impulses in my direction, I'll move my stop to break even. Or if price gets, I don't know, to the next level of resistance, I'll move my stop to break even. There are multiple reasons why, and everything works. It's just up to the individual what works best for them. So yeah, that's I guess to vaguely answer your question. I apologize that I'm giving such vague answers, but I'm in this vague mindset just because I don't want to influence whatever you're going to write here. I don't want to at all influence any input into the trading plan. This trading plan should be yours, because remember, when you're done with this trading plan and you look at this in a year from now,
this is going to be a reflection of your mindset. How are you going to know that you changed, that your ways of thinking and your understanding and your logic and your whatever, how are you going to know that's changed that's changed if you didn't actually write your own honest processes from your own honest mind? You'd never know. So that's the point. That's why I don't want to give you any information on what to fill out. I want to tell you how to fill it out so that it's still open to your own discretion, because this should be yours. This should be yours. Cool. So that was, will I exit? Okay, cool. What will allow me to exit completely? What will allow me to partial out? That was that. Cool. So after the exit strategy, guys, we've defined how we're going to exit our position. You know, we're only exiting at stop loss, take profit, or manually exiting that position. And even if we're manually exiting, we have reasons defining all of that stuff. So now there's no more discretion now. Now, after we press buy, we're patient. We're either waiting for stop loss or take profit. We've defined where we're putting our stops. We've defined where we're putting our targets. We've defined everything. Everything is defined. Now, no more touching trades halfway through and closing out blues because we're scared it's going to go against us. We're not emotional traders. We're logical traders. So anyway, guys, we're going on to our trading strategy, our setups, and our entries. We're finally here, guys. We're finally here. We're finally here. I'm happy to be by the trading strategy and setups. So question number one, guys, or rather point number one of our trading plan is, what is my primary trading strategy? If this question confused you, you still don't fully understand what you're doing as a trader. So I'll give you an example of how I'd fill this out. So what is my primary trading strategy? I primarily trade reversal structures in preparation for the, sorry, not reversal structures, corrective structures. I primarily trade corrective structures because corrective structures obviously involves both reversal and continuation structures. I primarily trade corrective structures in preparation for the next impulsive move. So I've defined what my primary trading strategy is. That's all I do, simplified. Corrective structures, looking for impulses, done. If your trading thing is not that simple or whatever, maybe you can say, oh, okay, I don't know how to complicate this. But anyway, what are my trading setups? That's when we start to get a little bit more specific on things, and we define setups like the types of corrective structures that we take, the types of reversal structures that we take. That's when we start to now define those things by going into the actual setups. Because remember, a setup is something that you're objectively looking for. If you trade double tops, then double tops are part of your trading setups. If you trade break and retests, there's never, I'm saying no chart patterns, maybe just break and retest of structure, then that is a chart setup. What objective thing are you seeing that is giving you a potential setup? That's what you're writing down there. So that is number two, you're defining what your trading setup is. Number three, how will you find those setups, guys? How will you find those setups? See how we're going back to the whole process of analysis. Obviously, you need to have the process of analysis. You need to have the process of elimination as well to narrow down your watch list. That's how you're finding these. That's how you're finding these setups. So obviously, you're going to have a little bit influence of that other answer in here about how you're going to find your setups. But then I guess in addition, let's not put any addition in it. Your process of analysis and your daily processes are kind of going to be defining points on how you're going to find your setups. So what is my entry criteria? Remember, we left this out that time. We haven't been talking about our entries, whatever candlesticks. Here's it here now, guys. Here's it here. So what is your entry criteria? You need to define the reasons that are going to allow you to enter a trade. For me, long story, very short, I look for chart patterns, and for candlestick confirmation, I look for rejections from a level of structure and momentum away from a level of structure. So I've defined my entry criteria that on my entry time frame, what I am looking for to trade is I'm looking for a chart pattern. So a structure, let's just say I'm looking for structures I'm looking for a level of structure to be created, market to push away, come back, show me signs of rejection and momentum shift away from that level of structure. And can you see how vague that is? Because rejection and momentum shift away can be a price coming to a resistance, putting in a small spike and a big candlestick away. That is rejection and momentum shift away from a level of structure. Rejection and momentum shift away from a level of structure could be price coming to that same resistance, one candlestick giving me a pin, second candlestick, doji, 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 bearish engulfing. Rejections, momentum shift away. So simple entry criteria, define that for yourself. What will give you the reason to actually press buy and to actually press sell if you're obviously taking that manual execution? If you're not taking a manual execution, what will give you, what is the entry criteria that you need to have on your chart there visible to you for you to be able to put a sell limit or a buy stop or a buy limit or a buy, or a buy stop. Define your entry criteria. So cool. Now that we've gone through our trading strategy, we've basically defined this trading strategy, the setups that we're looking for, and our entry criteria. Now we're going on to what happens after the market has closed. Yeah, so we had a nice eventful time. We analyzed, we traded, we managed, we closed, we whatever. Now the market is closed and we are relaxing. Should we be relaxing? No. Number one, guys, have I recorded today's trades? So after the market closes, you need to have a process of, you need to hold yourself accountable to recording your daily trade. Even if you're not recording, I took a buy on this, the price was here, the whatever, record something. I analyzed these pairs and these are the ones that I found entries on, and these ones won and these ones lost. Even that is recording something, guys. Record something somewhere, even if it's taking screenshots and putting them there just to go back and go and look at, record something. Have I recorded today's trades? This is after the market has closed. So please do record your trades. Number two, have I completed my trading journal? So also another thing, you need to have a process of completing your trading journal. So have I completed my trading journal? You're obviously going to write there, whatever your process of completing a trading journal is, what do you need to have by the end of the day? If I took trades on this day, then I need to have this. If I did not take trades on this day, then I need to reflect on my emotions. Why didn't I take this trade and whatever. So have I completed my trading journal? Go and reflect and go and complete the trading journal. Hey guys, aren't you guys happy? We finally reached number 12, guys. So we're at the discipline side. And the discipline side, like I told you guys in the beginning, that this is kind of the most subjective part of our trading, because I told you guys that businesses that are doing the exact same thing, that are doing something very similar, could have different disciplines. And obviously the disciplines change in accordance to what are the goals of this company. Maybe one company's goals is to just get a lot of clients, the other company's goals is to just get a lot of money. So maybe one company would have a goal on, like I was saying, looking nice and neat to attract clients to whatever, and maybe another company's disciplines would be sales or something like that, because they focused on money and just making sales. So disciplines obviously change. Number one, guys, what are my promises to myself? I can't even help you answer this question. What are your own promises to yourself? Do you have promises to yourself based off your trading goals? Do you have promises to yourself in terms of your income targets? Do you have promises to yourself of how you're going to keep to the structures and the processes that you have in your plan? Yeah, what are your promises to yourself, guys? Number two, guys, what is my commitment to back testing and forward testing? Here's it here. You guys thought you're running away from back testing. Here's back testing here. What are your commitments to back testing and forward testing? As much as I don't back test as much as I used to, I still hold myself accountable. There's no month, not 1 month that will go by where I won't back test at least one pair, at least 3 months or something of that nature. Hold yourself, what is your commitment to back testing? Hold yourself accountable to do the things that are difficult to do, because no one else is going to push you to do those things. Hold yourself accountable to those things. So what's your commitment to backward testing and forward testing? And what forward testing is, guys, Forward testing is, I wouldn't say, yes, let me say live testing, but it doesn't have to be real live testing. It could be demo live testing. It's up to you, whatever you want to do, whatever you classify as forward testing. If you want to risk real money in your forward testing, then go ahead and live test whatever you're doing. If you don't want to risk real money in your forward testing, then God bless the guy who invented demo accounts. Number 3, guys, what questions should I ask myself after a winning trade? And what this question is what if this question is there to make you refer back to yourself. What questions are you going to ask yourself after a winning trade? Go back to that psychology and analyze this monkey that's inside here that's all excited about this winning trade, that just wants to go back, that just wants to go on holiday this weekend or whatever. What questions are you going to ask yourself after you take a nice winning trade? Reflect on your psychology, please, guys. What questions should I ask myself after a losing trade? Obviously, maybe for both of them, you're going to reflect on your psychology and as well as your processes. Like maybe for your winning trade, you could also be asking things like, why did I win? What psychological headspace was I in? What was the setup that I took that made me win? What time did I win? You could ask yourself those types of things by what questions should you ask after a winning trade and as well as after a losing trade. Number 5, guys, what steps do I take to learn more? You guys won't even believe that. When was it? Yesterday, Friday. Yes, Friday. I'm confused, guys, because I'm not normally at work on a Saturday, so it's kind of very confusing. So Thursday night, I think I slept. I didn't sleep too late, but I slept at about past 11 or whatever. And all I was doing for 3 hours straight, all I was doing was studying. Studying what? Studying Forex. The same concepts that I used to trade. What I did was I did my research, find different sources of the exact same pieces of information and go through it all again. Hear someone else, hear another source of information giving me the same pieces of, I guess, just general knowledge. Just to hear what's the difference, what's the something that I missed within this. That still exists, guys. Learning never stops. No matter how much I feel like I'm comfortable with this or comfortable with that. Market structure. I'm feeling like I'm so comfortable with market structure, but market structure was one of the things that I was researching and going into on Thursday evening. Finding new ways. How do I become better and more efficient and more whatever in my processes? Learning doesn't stop, and you should have a process or have a routine of when you're going to hold yourself accountable to develop yourself as a trader, because you never know enough. You never know. No one ever knows everything. So there's always something out there, guys. Just, I guess, hold yourself accountable. So we're back to the rules, and I want to go over the rules after we're done with our trading journal. I just want to go through the trading journal as well. So there's a young section for your notes. Let's just see if price shifts above your SL. Sorry, I didn't see what we were talking about when that question was asked. If possible, Doc, can this be uploaded somewhere, because the jewels and gems need to be digested more than once. It's a wealth of knowledge, as Kajabi doesn't have updated recordings. This is being recorded and this will be on your Kajabi. You see exactly where you found the trading plan underneath your module 6. This video will go in somewhere there. So it is being recorded now. I'll probably give it a couple of hours to export and update after the session. I will say that. I see Eva saying that's true. We must never stop learning. Never, ever. Never, ever. Okay, cool, guys. So we're on to the position journal. So the position journal is kind of very simple and straightforward. This is meant to be a weekly/daily position journal. And the reason why I'm saying that is because you guys can see, cool, we've got position, we've got the month. So whichever month it is that you're trading and whichever week it is that you're trading, you've got the symbol and the direction. So that's the reason why I was saying that it's a weekly/daily one, is because if, for example, you're trading Aussie CAD, that's your symbol, your direction. If you're bullish on Aussie CAD the whole week and you're opening multiple positions, you're not going to print a whole lot of these different pages. This mic keeps on falling, guys. Sorry about that. You're not going to print a whole lot of these different pages to journal every single entry that you're taking on Aussie Cat Buy. So symbol your direction, the date you opened your first trade, and the date you closed your last trade. If your last trade is your first trade, then nice. The total amount of risk that you took on this position, the total amount of positions that you've taken. So obviously this accounts also your scale in positions. So if, for example, maybe you scale in, for example, maybe you even got stopped out on your first position, you ended up entering another buy, a second buy. The total amount of positions that you've taken on this pair in that direction, the wins you've taken, the losses you've taken, and the break-evens you've taken, your total profit or loss, your net profit or your net loss, and a note about this position. So kind of, do I need to say this? No. So it's kind of just like, I guess, like I was saying, a weekly slash daily journal, just so that you can be able to document your stuff, because we want to kind of develop something, or just kind of get used to always reflecting on what we did before. And I know I don't journal this consistently, as in like I'm journaling my every trade like this, but I do journal and I do self-reflect every week. I feel like the pairs that I trade don't need me to every single day go back and write down about each and every trade, because I've passed that point in my journey. I can still hold all of the setups in my head that I've taken this week and the reasons why I've taken them this week. And I can just reflect on those things. On every Friday, I do my reflection. I don't know if you guys have been following on Instagram. Sometimes I go live and I make that kind of reflection process public, so that you guys can see what's involved in the reflection process, how I identify an issue, how I move forward with that issue, how I go into next week, knowing what I want to be better at than I was this week. That's just the important thing. Whether you're doing that every single day, whether you're doing that every single week, part of the journal just has something, or just create something objective that you can see, that you can go back and reflect on. So the level of commitment that you're going to give towards your daily trading journal, I guess, should just complement the kind of trader that you are. If you're going to be a swing trader and you're going to take like, one position, two position, three positions a week, and your positions are going to be spaced out a lot more, then maybe you want to have a lot more writing down and maybe just a couple of screenshots. But if your position is if your trading is a lot more fast paced, you're scalping, maybe you're day trading, you enter a couple of positions in a day, then maybe you want to do a thing of taking more screenshots in a day, taking a record of that kind of a data, that the pairs that you're taking, maybe the positions that you're in, the profits and the losses, maybe take into account that, and then maybe just at the end of the day, you're doing a reflection of your emotions and your stuff like that, because you can't come back and reflect after every trade, how do I feel? After every trade, how do I feel? And you're scalping, and you must still go and reflect, how do I feel after every position? Doesn't make sense. So that's why this thing is like, that's why the whole trading plan is designed like this, so that it's 100% subjective, and so that it just accommodates any type of trader, because we're not trying to make you be a specific kind of trader. We're just teaching you what we've learned and what has been profitable for us. Like you guys can see, the whole 3.0 course is primarily built from a swing trading perspective. And that's because we found success in swing trading. Not to say that swing trading is the only way to make money, but there's a lot of value in swing trading. There's a lot of skills, there's a lot of personal development, there's a lot of this and that swing trading benefits aside from that. And so those processes are very helpful, even if this is not, maybe you don't want to ultimately be a swing trader or whatever, but just learning the processes can help a lot. So I think, guys, I've kind of drawn to a conclusion with regards to our trading plan. Hopefully you guys have printed your, I only saw one trading plan, guys. I only saw one trading plan. Kind of disappointing. I was hoping everyone was gonna unmute their cameras and be excited and all show their trading plans and like know that we're going through this, and next year we're gonna come back and look at how dirty and all these trading plans are, and laugh about the amounts that we had inside here, and laugh about the weaknesses that we had because we've overcome them. But guys, it's gonna be difficult to do something like that if you guys don't have a hard copy, because it's gonna be very difficult for you guys to be consistent with filling this out if you're filling out a PDF. how often are you going to go? When you open your phone, you probably want to do something else. You don't want to go and work. So it's going to be easier for you to be less consistent with actually going through with the process of filling out the trading plan. Secret of getting ahead is getting started, guys. So download your PDF, please download your PDF and have a hard copy that you can always reference, a hard copy that in 5 years you can come back and look at it and laugh. That's what we want to do. We want to have fun with the process. We want to enjoy this process, guys. So if there aren't any questions, lol, we printed. Let's see, Nuxi, let's see. Open your camera, let me see if you printed. Let me see. I want to see. I want to see. Oh, wait. That one looks beautiful, man. No, that looks beautiful. I'm happy, dude. I'm happy. I see. Does anyone else have their printed copy, guys? Does anyone else have their printed copy? I think not. Guys. Bokamat. Okay. I can see. Do you know what this shows me? This just shows me the level of dedication that some people have and the amount of seriousness that other people are approaching this with. The fact that you took your time to go and print this is already you getting started with the process. If you did not print it yet, how are you going to fill it out in the first place? It's already you showing the commitment to the process of getting this done. Thank you so much. I appreciate it from the bottom of my heart. You made me happy by getting this done. That shows the level of commitment. Thanks so much, guys. I think I'm going to call it a session now. Let's not stretch it on for too long. I still need to wait for this to export for the next hour. So thanks, guys. Thank you so much, guys. Thank you so much, guys. The meeting is recorded, so you will find it on your Kajabi in the 3.0 and in the webinar package, guys. Thanks.